Hi, Paul Gerrard from Price Accounting Services, back again to talk about deductions labelled D1 car expenses. Fortunately, we've managed to simplify this element of the tax return because for the last 2 years there's only two methods available for claiming this deduction. Simple ways, logbook method and the cents per kilometre method. So we're going to explain the two methods that individuals will use to claim those sorts of expenses. We're not dealing with business income at this point, we're just dealing with that of individuals. So the first of those is the cents per kilometre method. Now, cents per kilometre method is a bit simpler in terms of the substantiation requirement. In order to claim for the vehicle, first of all, you must be one of the owners of the vehicle. So you can't claim cents per kilometre for a company car, for example, because that's not, you don't own it. Cents per kilometre works on the basis of you're eligible to claim up to 5,000 kilometres per vehicle. That's per vehicle, that's an important issue, over the course of a year. Now, what do we mean by that? Okay, 5,000 kilometres, and it's a set rate of 66 cents regardless of whether you're driving a V8 SS Commodore or you're driving a little Mini, okay? So 66 cents times 5,000, assuming you did say 7,000 work kilometres. When we talk work kilometres, we are definitely never talking about going from home to work or work to home. We might be, for example, going to work and then the boss says, look, I want you to go out and go here or there, that's fine. Or you might be attending other workplaces, for example, client premises or some such thing, okay? So how do we record and substantiate all the distance? The best way, I reckon, is a diary or a consistent record. Could be a GPS, could be a logbook, whatever you choose to do, but you don't need to keep a full logbook. We just need to know the dates, the distance. Now, you can estimate this. You just have to use a reasonable basis. So let's use the example of Fred. Fred goes to his companies, he works in the warehouse, and once a month he needs to go to another suburb where they have a finance office, and he has meetings with various people, and then he returns to his other workplace. And he does that every month, okay? And let's say he does it twice a month. So let's say it's 40 kilometres round trip, so it's 80 kilometres per month that he's travelling, times 12. So that gives you the total number of kilometres, times 66 cents. It's really relatively straightforward. And that's acceptable. Of course, the ATO could always look into that later and ask for more information, but generally we find that that isn't the case. So keep good diary records. It's amazing how these things really do add up, okay? Then you start to remember, oh, but hang on, I not only went there, they asked me to go and pick up things here or there for a client. Oh, and what about that time I had to go up to Newcastle? You know what I mean? It really adds up. So that's cents per kilometre. Now, logbook. Here's the tough one. Logbook method requires you have a logbook. If you don't have a logbook, you can't use that method, okay? The tax office will not only deny the deduction, they will impose penalties, okay? So for a logbook, here's what you need. You need to go and buy a logbook, and you need to maintain it for 12 continuous weeks. And it sets out that reasonable proportion between private use and business use. And when I say business use, again, we're still talking about individual taxpayers. So let's say you're a sales rep on the road, okay? It'll calculate over those 12 weeks, you've got a starting odometer reading, closing odometer reading, you've got all your business and your personal trips all itemised to a degree, and we can work out the proportion from one to the other, okay? Once we've done that, all of your operating costs for the vehicle for the year are multiplied by that percentage, and that's your deduction. So what are those deductions? Okay, the big ones are these: fuel, repairs, depreciation of the vehicle, interest if there's any finance on the vehicle, insurance, rego, etc. Okay, so it's your obligation, if you have the logbook, to maintain record of all those costs. Now, some people say, does that mean I need all my fuel dockets? No, it doesn't. If you've got them, great, that's good. But how much fuel did you buy during the year in total? Now, some people will turn around and say, well, I fill up every Monday and I'm somewhere between $40, $45. That might be a basis to use. That's a reasonable basis. But we still need to then look at the average that the car's travelled over a full year, because it'd be a bit unreasonable if you've only travelled a short distance to then be claiming so much fuel. So it's up to you to make sure that you provide us with that total annual fuel spend or estimate. Now, other costs such as repairs, etc., we can't use that estimate, okay? We need to know what those repair bills are, so hang on to them, keep them. Keep your rego, keep your insurance, etc. Easy. Once we've got that total cost, we'll calculate the depreciation. We just need to know what the vehicle cost and when it was purchased, okay? And finally, question often comes up, husband and wife taxpayer, can we both do these things? The answer is yes, you can, but you can't double dip. So if, let's say, you share the use of the car and the husband says, well, I use it 20% for work, and the wife says, well, I use it 20% for work, that's probably reasonable. But if you can't both say, well, I use it 50% for work, and it's our only car, because 50% each for work, it's 100%, so you've got no private use at all. Doesn't seem valid. So if you've got any questions about that, do get in contact with us. We're happy to guide you and happy to assist keeping it simple, okay? So until our next video, that's it for now. All about D1 vehicle car expenses. And if you've got any need for assistance, give me a call, give me an email. We'll see you on another YouTube video soon, and catch us on our website. Cheers.